Good afternoon. Stand by. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang coming up at 5. Mottek On Money. We are live on the air on 790 KBC, streaming live online worldwide at 790 KBC, KBC.com, that is, an on-demand podcast, KBC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Positive start to the new week on Wall Street, coming off a record-shattering month of July and a pullback on Friday following the weaker-than-expected July jobs report and tariff uncertainty. An impressive rebound today. The Dow closing up nearly 600 points, settling at 44,174. The S&P 500 up nearly 100 at the closing bell at 6,330. And the NASDAQ popping more than 400 points higher at 21,053. Taking a look at the price of oil, it slipped today, right now hovering back into the mid-60s. Gold has been on a tear again, hovering above 3,400, right now 3,429 an ounce. And Bitcoin has pulled back from recent highs right now at around 115,000. Shares of NVIDIA moving higher, the Magnificent One up another 3% today. Meta and Microsoft also moving close to all-time highs. The president's battle with the Fed chair continues to remain in focus, with bets being placed on the chance of a rate cut in September. Looks like a lot of bets are being placed on a rate cut next month. Investors also trying to figure out what's happening next with tariffs. President Trump today said he would be substantially raising tariffs on India, as he heard Tom Looney report. So this must be a big deal here. Tariffs on India will be substantially raised as the president presses India to stop purchasing Russian oil, effectively accusing Russia, of India, that is, of subsidizing Russia's war in Ukraine. Tesla stock moving higher today on reports the company has granted Tesla CEO Elon Musk 96 million shares of Tesla stock worth about $29 billion. Looks like the board still has to approve that one. Switzerland bracing for big tariff hikes on its exports, which could impact the watch industry. We're watching that story for you here. Also, American Eagle stock moved higher today as President Trump got into the discussion around the company's ad campaign featuring Sydney Sweeney, which is everybody's talking about. Sydney Sweeney, a registered Republican, has the hottest ad out there, according to the president on his social media platform. We'll talk more about this story with the PR and marketing guru extraordinaire, Michael Levine, who will be joining me live later this hour. Shares of Joby, that's J-O-B-Y, moving higher by about 5% today after the electric air taxi developer said it would acquire Blade Air Mobility's helicopter rideshare business for about $125 million. Front page article in the Wall Street Journal today says it's a hot summer for making deals like this, corporate deals, that is. As in merger deals, a sudden rebound in corporate deals has bankers and lawyers scrambling in what's usually one of the slowest times of the year for corporate deal makers. We'll talk about what's happening with the giant on the M&A scene here in the Los Angeles area. That would be Jim Friedman, Managing Director, Chairman, and Founding Principal of Intrepid Investment Bankers in West Los Angeles. He's been recognized as a visionary and one of the most influential people in the world of finance here in the Los Angeles area. Jim Friedman will be joining us live later this hour. But first, on your money, the markets, the economy, gold, crypto, in fact, the whole works now. Joining us live, top-ranked money manager Ken WINANS, President and Chief Investment Officer at WINANS Investments at WINANSinvestments.com. Ken WINANS, a market historian, author of numerous books, including Investment Atlas 1, 2, and 3, also Forbes magazine contributor. He has his crypto credentials, too. Most importantly, he's host of Winning with Winans, heard every Monday night at 6 p.m. right here on your favorite station, 790 KBC. Good afternoon, Ken Winans.
Frank, I'll tell you what, would you have ever imagined that we would be having a battle between American Eagle and Abercrombie and Fitch over the size of models? I mean, I had talks all weekend long with people about this. I mean, of all the things in the world we have to worry about, but it is funny how it comes back to these things. And I bring it up, certainly I'm being very sarcastic right now, but it's just where the focus is. And I find it so interesting that, I've never seen investments so partisan as they are now, the discussions with people so partisan as they are now. And you can't, quite frankly, you can't even make a joke about anything. But with that being said, the other big talk was obviously President Trump fired one of the key statisticians for the government. And, one side says this is all politically motivated. The other side said this was incompetence. but it goes back and forth. But this is what is important for everybody in the audience to remember. Number one, markets are still drifting higher. The internals of the U.S. stock market, meaning the number of new highs versus new lows, the number of advancing issues versus declining issues, volume, all these things are still okay. They're not deteriorating. I mean, in my years, you can pretty well spot when there is, I mean, you certainly can't predict a full-blown horrible bear market, but you can certainly predict when the markets are going to start getting soft. I don't see that yet, but with the only caveat that, according to Bloomberg, they had all these, these market strategists claiming that it's an imminent correction coming. And I would just tell the audience, well, look, number one, August through September is usually a very soft time in the market, but your mindset should be to buy the dip, not sell the rally. And I think that, again, it's just very politically motivated.
It's interesting that the clothing names you mentioned right off the bat are getting a lot of attention on Wall Street now, largely due to that American Eagle Outfitters ad and President Trump adding to the attention today with his comments. Looks like American Eagle Outfitters stock popped more than $2 today, $2.54 at $13.28. Abercrombie and Fitch shares at more than $8 at 99 and change. What about this sector that's getting all this attention?
Well, here's what's interesting. When you talk about tariffs and you talk about cost increases, one of the big areas everybody's talking about was apparel. I mean, that is a logical area, and there were a lot of reports coming out that a lot of the countries that do produce jeans for us, namely a lot of the countries that we actually just signed some trade deals with. But here's again where a very nimble company can take whatever set of facts they are dealing with, and they can adjust and they can pivot. That is what you pay these CEOs to do, not to complain, not to make excuses, but to pivot and take advantage of a situation. So my hat's off to, this very competitive industry that they have everybody in the world talking about it, good and bad. But Frank, I think it also goes back that, again, all the talk on the tariffs, I mean, I don't know about you, I am tariffed out. I mean, it's becoming a blur. It's becoming a downright boring conversation to have with people. And I just simply bring up that, these companies, and especially the industrial companies, which are supposed to be hit very, very hard, they're one of the hot groups this year. They're the groups moving up. And so I would just caution everybody to think about, it used to be in the old days, you would buy a stock because you believed in management, you believed in the products. And yes, the world has gotten confusing with the fact that stocks now move for a lot of different reasons, such as being included in an index. But I'm just saying that this has been a stock picker's market, and you can clearly find players who have navigated it better than others.
It's a complicated world, and we all have to move through it. On the air live with top-ranked money manager Ken Winans, host of Winning with Winans, and we'll be on again at 6 o'clock this evening here on 790 KBC. Taking a look at the earnings news. The earnings parade continues, and we've certainly seen some big news in the last week or so with the big tech names. And today, Palantir stock surged after hours on the company's earnings news, reporting its first billion-dollar quarter. This is a company that also has a defense component. What about this one that's getting attention here this afternoon?
When we talk about the Magnificent Seven, I always find it funny that Palantir is never really included in that, and yet when you look at a lot of the rankings, it usually keeps in lockstep with a lot of the hot stocks. Here's the thing that's so interesting, Frank, is that the earnings season, and everybody was predicting this earnings season was going to be an absolute disaster. It's not. The vast majority of companies had either exceeded their top-line revenue growth or possibly their bottom-line growth, and a huge number of them have exceeded both sets of statistics. So again, I think it just goes to show that the earnings parade is going to continue. We have the retailers, which have been showing some softness as of recently. But, I have to tell you, Frank, that the unsung stalwart of this rally, and it just doesn't get much credit, is that I was blown away to watch the utility ETF on the S&P 500, the Spider Utility, hit a new high today, an all-time high. It is about power. We can talk about rare earths and all these other things. Hey, if you don't generate electricity, forget all this other stuff. None of it's going to work. And with basically the moves that have been made in the Trump administration, the focus on nuclear power, the focus on, living in Las Vegas, the talk is about here, solar farms actually work because of our climate. They work here. It's all about generating enough power that these AI power centers can have enough power. And quite frankly, the crypto miners are in the same boat. But I'm just saying that, I'm looking right here at the oldest companies that are publicly traded. The number one group, I know people are going to say, Ken, you're crazy. The group that has outperformed technology in 2025 are utilities. The old guard utilities have done a number on the old guard tech.
On the Air Live with Ken WINANS, and one stock that's kind of been stuck in the mud compared to some of the others here. Apple only up nearly $1 today in this big rally at 203 and change. And last week, Apple came out with its earnings. Normally, that would be, of course, the biggest news almost of the year when Apple earnings news comes out. And Tim Cook holds his earnings call and all that. But looks like this time around kind of acknowledged that they're behind the curve on the AI trend and may turn to M&A to pump up their AI holdings. What about Apple here?
It's actually a very smart move for them to buy. When they can't grow internally, buy the growth from somebody else. They have the cash. They have the money to do it. You could have Apple become, Oracle did the same exact thing. So did Cisco. When they finally hit where they could not grow the way they were internally, they went out and bought it. It's logical. But Apple has another problem. And I'm going to talk about it in a moment. We're going to talk about it tonight on Winning with Winans, but it is the design of these indices. When you talk about the S&P 500, you talk about the Dow. I've had a lot of people talk about the valuation issues on the S&P 500, and I brought it up to many, many people. What you're not including is that the S&P of 5 years ago and the S&P 500 of today are entirely different animals. The people who oversee the construction of the index have added a lot of very high octane stocks to that index. I don't necessarily agree with it because I don't think you should add a company that has not been publicly traded for a decade. That's my personal opinion. But my problem is that, they talk about the valuations on the S&P. Well, they've added all the hot stocks who automatically have higher valuations. The problem is Apple is a part of all these indices. And when everybody owns Apple, you have to ask the question, who's going to buy it next? So until they come up with something new or something amazing, it's what we would say in the commodity world, it's a crowded play. No one else is going to buy it. They already have their fill of it.
Let's not forget NVIDIA, the Magnificent One, looks like at a record high here today, at $180 a share.
You know what? And that would be a good lesson for the folks who run NVIDIA to watch and see what happened to Intel, watch and see what happened to Cisco, Oracle, now Apple. The mighty can fall. And if you miss your mark for any reason whatsoever, and all these companies in their heyday seemed invincible, you can see the market value of your stock drop. But NVIDIA, again, you have another situation. There might be a handful of people who are late to the party with AI, but I'm finding that is pretty well drying up pretty quick. Everybody, especially with the window dressing that goes on every quarter, pretty much every manager has their AI components in the portfolio. But I would just say that obviously it has a celebrity CEO. It's a celebrity stock. We talk about it an awful lot on the financial news. And as long as you have that, there are going to be people out there, especially individual investors, are going to feel, I better add more to it. My only cautionary note to them is to remember this stock took a real hammering in April and took a real hammering in 2022. Like I'm talking about huge losses. So be prepared for a very volatile ride if you jump in at these levels.
All right, speaking of celebrity CEOs, Tesla back in the news today on this pay package. Elon Musk could be putting $29 billion in his pocket based on this pay package that we're talking about today. Ken Wyans, Tesla stock higher on this news of more than $6 at $309 and change now that he appears to be back at the driver's seat there at Tesla.
I get asked a lot about the pay packages, and I know it's a lot of political rhetoric. At the end of the day, it's a private matter within a corporation. Companies and their board of directors can decide what they pay their top line executives. And as I mentioned earlier, we're clearly seeing that there are thoroughbreds in the executive world who have been able to navigate this change with tariffs, and there's a lot of people who can't. And I think that right now we're willing to pay for the talent necessary for basically companies have to sell their services or products, and they have to sell their stock. And a good CEO of a publicly traded company can do both of those. And so, I think it's safe to say it's Tesla's matter. They have to decide on it themselves. But I'm sure that it will be an awful lot of political talk about this and probably some inside dealings and all this other nonsense. All I know is that Elon Musk is somebody who I know you have met and I have met. He's one of the great geniuses of this century. You know what? What's the price of that? It's hard to say.
And Ken Winans, before I let you off the hook here now, and then we'll be able to continue our conversation at 6 o'clock this evening on Winning with Winans for the Mottek On Money audience here now. Any specific places where you are putting money now and or taking it off the table?
Well, you know what? I'm going to go back to what I said earlier about the utilities. And I'm always amazed that people, they just assume that they are the boring old stocks of their grandparents. And as I just said, I've given you proof they have been one of the high flyers. So number one, if you're an ETF investor, go check out XLU. It is the utility ETF. It's been around for a long time. It's up 16% on the year, 39% in the last 19 months. But if you want to go into individual stocks, there are a lot of them. Now, keep in mind, we know the problems that the West Coast utilities have had. I would avoid those just because of the fire problems. But you can go right on down a list of these, and I'll just throw out a couple of them. I would take a good look at AEE, which is Ameren. It's a utility in the central part of the United States. Another one that's kind of interesting. It's you don't hear about it. It's crazy because of the fires that happened in Maui, but you have to take a good look at HE. It's up 13% on the year. Hawaiian Electric, and then you know what? The old guard. It's been around forever. It's always on the right side of whatever happens. Is Duke Energy, symbol DUK. It's again up 16% on the year. Again, go back. If you do not have the industrials and the utilities in your portfolio, you're missing the Trump play. You need to get on board.
Terrific, Ken. Thank you very much for taking the call here this afternoon. That is top-ranked money manager Ken Winans, President and Chief Investment Officer at Winans Investments at WINANSinvestments.com. Ken Winans, a market historian, author of numerous books. His latest is Investment Atlas 3, also a Forbes magazine contributor. So be sure to check out his latest article titled The Great Whipsaw of 2025. Investors need to pivot into Trump-era stocks. Ken, look forward to continuing the conversation this evening at 6 o'clock on Winning with Winans right here on 790 KBC. And looking forward to talking. There's a lot to unpack here today, so we're going to do it.
You're not kidding, Frank. A lot. We'll talk later.
All right. Thank you very much, Ken Winans. And let's get out to the freeways now here on 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. The Dow popping higher today of nearly 600 points. Up 585 at the bell at 44,174. The S&P 500 of 92 at 6,330. And the NASDAQ gained 403 points at 21,053. Rebounding impressively from Friday's sell-off following a winning month of July, now August. Getting off to a somewhat positive start here. The volatility index pulling back 14% following that big spike on Friday. Taking a look at the price of gold, it's still hovering at around above 3,400 at 3,429.40 an ounce, up $3 here at the moment. Crude oil futures pulling back today, back to 6,600, back to $66.27, down to 2 cents here at the moment. We're watching what's happening with the yield on the 10-year note has slipped back to 4.19%. Looks like mortgage rates have suddenly hit a 10-month low as the yield on that benchmark government note pulls back. We're seeing Palantir shares move higher in after-hours trading on its latest earnings news. That's coming out after the closing bell today. Palantir shares up about 3%. That's the defense technology company announcing revenue surpassed $1 billion for the first time. Palantir's stock closes at more than $6 at $160 and change, up another $6.50 or so in after-hours trading. NVIDIA at a record high, more than $6 today at $180. Apple at 97 cents at $203.35. Shares of American Eagle Outfitters moving higher today. That's the one with the famous ad that we're going to be talking about later this hour, up $2.54 at $13.28. The ticker symbol on that one is AEO. Checking the cryptos now, we see a Bitcoin up about 300 at 115.94. Ethereum hovering at around 3,720. Solana at 168, and Doge at the moment at 21 cents. And now the latest news on 790 KBC.
Jim Rome takes on sports.
I'm here to give my State of the Union. What do I always say? While they may always be a disappointment, they're not always horrendous. And that's why this season feels different. They just suck.
He's the Spitfire of sports smack.
We've got lava being flung and slung in every single direction imaginable. It's hard to even know where to start with this tsunami of bullcrap.
The Jim Rome Show podcast.
How are they doing?
Follow and listen on your favorite platform.
Welcome to NFL Flag.
Are you ready? Yeah! Are you ready? Yeah!
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it!
Chase the big time.
Get that, ladies!
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Mottek On Money continues here, 790 KBC. Hearing more about merger deals lately. Joby shares moved higher today by about 5% after the electric air taxi developer said it would acquire Blade Air Mobility's helicopter rideshare business for as much as $125 million. Joby stock moved to more than $3 at 20 and change. And Blade shares moved up 65 cents at $4.43. This has a front-page article in the Wall Street Journal today, says it's a hot summer for making deals, corporate deals, that is. As in merger deals, sudden rebound in corporate deals has bankers and lawyers scrambling in what's usually one of the slowest times of the year for this sort of thing. And joining us live now, a giant on the M&A scene here in the Los Angeles area, and that would be Jim Friedman, Managing Director, Chairman, and Founding Principal at Intrepid Investment Bankers in West Los Angeles. He's been recognized as a visionary and one of the most influential people in the world of finance here in the Los Angeles area. Jim Friedman, thank you very much for taking the call here this afternoon.
Hi, Frank. Thanks for having me on your show.
Wonderful to have you with us. It sounds like you're busy these days. Give us an update on M&A activity here as you see it.
The market has been very interesting, Frank, in the last 9 months or so. After the second week in November when Trump was elected, everyone expected the merger and acquisition activity to pick up. There would be less regulation. There'd be more favorable economic outlook. And that didn't happen. It turned out that the first half of 2025 was relatively slow. A lot of deals that were under contract to be closed didn't close. As many as 30 to 40% actually did not close because of all the uncertainty related to the tariffs, the economy, interest rates. And what's happened in the last few months is that seems to have gotten better. And we have kind of a dichotomy of situation where certain companies are doing really well. Our biggest practice right now, for example, is healthcare. We just announced 2 major deals in the healthcare industry. Both of these were service companies, one in the pharma services and one in the telemedicine services business. If you're in the service business today, whether it's healthcare, whether it's technology, marketing services, you seem to be doing quite well. If you're in anything related to tariffs, importing, you're not doing very well. And so we just have this dichotomy, as I mentioned, of companies, and some are doing quite well and some are really in trouble.
On the air live with Jim Friedman, Managing Director, Chairman, and Founding Principal at Intrepid Investment Bankers in West Los Angeles. Thank you for that thorough assessment. Uncertainty, certainly, over a tax policy has now been lifted with the passage of that big, beautiful bill. That alone was certainly a big piece of the puzzle, right? How will this impact, you think, merger deals moving forward?
I don't think that tax policy is going to affect merger deals so much as some of the other macro trends that I talked about. The tariffs, were not affected with this bill. Some of the other costs that can't get passed on will not be affected by this bill. So I'm not sure that that bill itself has a lot to do with the M&A activity. There are certain corporate tax rates that got lower, which should help a little bit. But all in all, I don't think that is going to have very much impact on the M&A activity.
All right, you're also a leader here in the business world, and were impacted by the fires. I remember when you had to be evacuated in that area where the fires erupted during the horrific firestorms. Jim Freedman, what are you hearing about the firestorm recovery as it relates to businesses in the area?
A lot of businesses were not affected. There were a lot of smaller businesses and service businesses in those areas that certainly got affected and were very tragic. But a lot of the manufacturing, a lot of the bigger companies were outside of the Pacific Palisades and Altadena areas. And so I don't think that had a major impact on the economy or the M&A market here as well.
All right, and you'll be gearing up for the big M&A conferences again soon. What is the hottest topic right now in the M&A world?
I think a lot of it has to do with the services economy, anything related to services, Frank. As I mentioned, healthcare, things like air conditioning, plumbing, pool cleaning. These are rather mundane businesses that didn't have a lot of attention. Now, all of a sudden, private equity is doing roll-ups in these service businesses because they're not being effective by the tariffs that they can't pass on to their customers. Things like consumer products, however, which are largely import-based, they're struggling, and they're going to continue to sort of be in limbo until this tariff situation works itself out. And other good areas of the economy are technology and software, doing quite well. Food and beverage is doing quite well. And even industrial and manufacturing, if it's made here, those companies are generally doing pretty well right now.
Very interesting. Of course, no conversation would be complete nowadays without mentioning AI. And during that earnings call with Tim Cook last week, looks like he alluded to a possibility of a merger deal involving some sort of an AI entity at some point. Are you seeing more companies interested in teaming up with an AI-related entity these days?
Everybody's talking about AI, and it certainly is a gigantic factor affecting a lot of companies. And so companies are either going to have to implement AI within their own companies or, like Apple said, try to find acquisitions that can make them a lot more savvy in the AI world. There's just no doubt about it that that's going to be a major contributing factor and disruption to a lot of different companies in the next few years ahead.
All right, give us your thoughts here on the overall economy with kind of mixed signals last week based on that jobs report and somewhat uncertainty here about what the Fed's next move might be, although it looks like the bets are being placed on a rate cut. How's financing looking, and what's your gut feeling about this economy here?
There's still a tremendous amount of capital in the private equity world, which we're involved in quite a bit. There's over $1 trillion of what we call dry powder looking for deals. And whether it's equity or even the debt financing, you've seen this huge rise of private credit that's happened just in the last 6 to 9 months. So it's really not a function of the amount of capital that's out there. It's really making sure that companies are deserving of the capital, and there's a lot more scrutiny going on to make sure that those companies are going to perform and are going to be able to react to things like AI and other disruptive factors going on in their industries.
All right, as you noted, L.A., the largest manufacturing region here in the United States. Are you seeing a desire for manufacturing to more to come here, or are they checking out?
I think in general, manufacturing has been leaving Los Angeles, leaving California because of the tax policies, because of the regulatory environment we have here. So we're seeing, especially LA County, become much more of a service-oriented economy than manufacturing, and I think that's going to continue for the foreseeable future.
Jim, wish we had more time, but thank you very much for that thorough update on what's happening on the M&A scene here in the Los Angeles area and indeed nationwide. Look forward to seeing you at upcoming conferences. That is Jim Friedman, Managing Director, Chairman, and Founding Principal of Intrepid Investment Bankers, based right here in Los Angeles. Thank you very much for joining us live here this afternoon.
Thanks, Frank. Good luck to you.
Thank you very much. And out to the freeways now, 790 KBC.
Former U.S. Navy SEAL Sean Ryan captures real stories about sacrifice and strength.
Looking back, what would you tell your 10-year-old self?
Just hold on. The amount of times that this man is threatening to shoot me.
There's a saying, there's no atheists in a foxhole.
That's what I hear.
Uncovering truth with the heroes who live to tell it.
You had a guardian angel.
I did.
Why did you think that?
So many things happened that I just come out okay.
The Sean Ryan Show.
Go ahead, pull that trigger.
You ready?
I'm ready, brother.
Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KBC. A lot of conversation over the weekend about American Eagle Outfitters. The stock rose today by about 16% after President Trump got into the discussion around the company's ad campaign featuring actress Sydney Sweeney. The president said Sydney Sweeney, a registered Republican, has the hottest ad out there. The president wrote in his social media posting, "It's for American Eagle and the jeans are flying off the shelves. Go get 'em, Sydney." Looks like that ad is getting a lot of attention. The Sydney Sweeney Has Great Jeans campaign is underway and also getting the attention of PR and marketing guru extraordinaire Michael Levine right here in the Los Angeles area in Hollywood, who's live with us here this afternoon. Michael, thank you very much for taking the call. I'm sure you were probably bombarded by questions and comments about this ad campaign. Give us your reaction, how this is all played out.
Well, Frank, first of all, thank you for sharing your audience with me. But I think at this moment in time, it's an unquestionable triumphant victory for American Eagle. And I think it raises a topic, Frank, that's a broader one than this particular campaign, which is the American public seems quite clearly sick and tired of this radical woke intimidation that they that they felt shoved down their throats over the last half decade. For about 5 years, a small group of loud, obnoxious, frankly, radical woke spokespeople, I guess, have made Americans sick and tired of their illogic. And so I think American Eagle is the beneficiary of that rebound, because I think Americans have had enough of it. It just is not appealing. Bud Light was an early indicator of that, but I think American Eagle is even more profound.
All right, and the president chiming in today, and the stock took off. What's your reaction to that part of the story today?
Well, Frank, I mean, you don't need to be Warren Buffett to figure out if in one day your stock goes up 16%. That's called a pretty good day, right? And I think it's an indication not only of how people feel about this particular ad campaign, which is obviously enormously popular, but I think it's a symbol. It's a symbol of Americans saying, enough. We're tired of being intimidated and force-fed this political correct, woke, radically woke logic. And so I think American Eagle is a beneficiary of that.
All right, and certainly in recent years, we've seen other campaigns, which you've commented here on, Budweiser, for example, Jaguar, not so successful.
Yeah. No. You know, there is a saying, you know it, you've heard it, get woke, go broke. Well, this saying, get woke, go broke, is popular in certain circles because it's true. The record of companies who have taken a woke course in their advertising and promotion have done very, very, very poorly. Companies who have embraced this kind of radical political messaging have done very poorly. Companies who have turned against it and gone with much more traditional. I mean, if you want to sell a pair of blue jeans in America, what better way can you think of getting a beautiful, attractive, of-the-moment it girl to be in your ad campaign? And I think this is, as I said, I think their social significance of this campaign is greater than just one particular successful ad campaign.
On there live with PR and marketing guru Michael Levine. And what about recovering from those campaigns, Bud Light and Jaguar? Looks like Jaguar recently fired their top guy in all of this. How does a company bounce back from something like that?
Well, look, when a person or a company, an organization makes a mistake, particularly a glaring and obvious one, the very best path is to acknowledge it as quickly as possible and to turn course. I mean, when you're in a hole, quit digging, right? So Bud Light, I think, got probably the biggest spanking of any major company in America that I can think of in the last decade with their campaign. And I think the word is now out that the message is clear, and the word is out. People don't want to be lectured in their advertisements and their sports programming. They come to sports events and other recreational events not to be lectured to. And if they are lectured to, they're going to turn off. And it's pretty simple. I think a bright 10-year-old should be able to figure this out.
What about their comedy shows, Michael, with Stephen Colbert?
Same thing. It's the same thing. If you have an audience of 100 people, 1,000 people, 1,000,000 people, and you massively insult them day in, day out, day in, day out, day in, day out, should you be surprised that your audience leaves you? I mean, again, and yet, and this whole controversy about Stephen Colbert being canceled. Look, once upon a time, Stephen Colbert had a TV show, okay? And the ratings were a disaster, and it was losing about $40 million a year for CBS. So should you be surprised that CBS canceled the show? I don't really think that's how long would you like to lose $40 million a year?
Absolutely. I remember when those comedy shows were funny, by the way, as you do. PR and marketing guru Michael Levine, thank you very much for joining us live here this afternoon on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz. And then at 6, stay tuned for Winning with WINANS with top-ranked money manager Ken Winans here on 790 KBC.
Jim Rome takes on sports.
Why? Because you're not playing me.
With rapid-fire takes.
Y'all went from the Super Bowl straight to the toilet bowl. He's not over the NFL. The NFL is over him.
Scorching debates.
All the good, all the bad, all the ups, all the downs.
He's the Spitfire of sports smack.
Sorry for what I said because it was appropriate when I said it, but I can't say it anymore, dude. You are killing the game.
The Jim Rome Show podcast. Follow and listen on your favorite platform.